I always say everyone is a born investor. Even you are a born investor. And you would ask how. Everyone in this country has a pension after a certain age. Everyone in this country has an insurance. You know all those big insurance and pension funds and the banks to deposit, go and buy bonds. Now the mission is to educate, and sessions like this, I'm very grateful you've called me here to tell people that if you were to invest in fixed income, rather than fixed deposits, you can make more money and have better choice. If you take Nifty exactly 30th September 2021 to Nifty in 25, it would have given you on a headline basis a 42 to 43% return. 4 years ago, if you invested in a corporate bond at 10%, and bond maths works that your interest, you reinvest at the same rate.
Correct.
So if you had bought a 10% bond, it would have given you 46% in 4 years' time. Everybody knows ki kuch paisa, some money I have to keep safely on the side, 10%, 20% of your wealth or liquidity. They thought FD was the only way to do that. There were some long programs like postal savings and things which have the problem that they're locked in for 5, 7 or 10 years. They're not transferable, so you can't exit them. And bonds follow, give you the perfect solution not to keep your money stuck. So fixed deposits is, if you want to be like your grandfather, go ahead and do that. But bonds are the new thing.
Bonds are Gen Z and fixed deposits are grandfather. Welcome to CXO Connect, where I try and bring you in-depth conversations with India's most forward-thinking business leaders. Today, we are diving into the fast-evolving world of fixed income investing with Vishal Goenka, co-founder of India Bonds. With over 2 decades of global fixed income markets and leadership roles at Deutsche Bank, Merrill Lynch, and RBS, Vishal is now on a mission to make bond investing accessible to every Indian. Thank you for joining us today, Vishal. You spent 2 decades in the global fixed income markets, right? From Merrill Lynch in London to Deutsche Bank in Singapore. What motivated your shift from global banking to fintech entrepreneurship, and that too in India?
Very good question. I think what I learned over these 20 years is not about the fixed income market, the bond market, and mostly in developed markets, right? The idea really came around COVID time. Basically, I would imagine a lot of us had more time or working 18-hour days because nothing else to do. And me with my co-founder, we were like, as India grows, we are an equity crazy country. We believe in gold and real estate. Globally, I saw that fixed income was part of everyone's portfolio. And in India, we never spoke about it. And thanks to digitization, I thought, why not get fixed income to the Indian masses? And people do not realize how big the market is. Currently, it's a $2.8 trillion market in India. The corporate bond market is $628 billion. So the size of the market was there. The digitization was done as to how you get your story to everyone. And it was about education, building around technology and things like that. So I really thought that after 20 years, maybe try and do something disruptive. And why not in your own home country? Because my first job in fixed income actually was in Mumbai, where I learned some of the early ropes.
So you're quietly unpacking corporate bonds for this country. You're creating a category as I see it. Well, most of us wouldn't know, and I got to know it only while researching for this interview, that bonds are quietly outperforming equities. There's regulatory shifts that are making debt more democratic.
Yes.
And of course, like you said, tech in a big way is reshaping the investor journey.
Yes.
What used to be a 48-hour trudge has now become a 4-minute easy sale.
Absolutely.
Now, while all these factors hold true, what is that personal moment where you said, I'm going to take the leap. I don't want to, I'm going to go back to India and I'm going to become an entrepreneur?
It was a tough call. Ask my co-founder and she will tell you. So we had started in 21 more as an idea. The inflection point where I said, okay, I'm going to take the jump is when SEBI came and said, I'm going to regulate this industry. So as technology and fintechs had grown in India in 2021-22, what we say the super growth, or some say crazy times, a lot of platforms came about. A lot of platforms were selling things which may not be right in the right manner. When SEBI said, I'm going to regulate this industry, I think that was the inflection point for me. I remember going and talking to my global boss and saying, I want to do fintech entrepreneur. Obviously, they thought I'm crazy, but I think in financial services, once you have a regulatory framework, and we found a regulator to be very proactive, trying to push the opening up of the market, that you can build for scale in a regulated environment. And that was the inflection point. It was a landmark birthday I was reaching, and I'm like, if not now, when? If not me, who? And I said, let's take the plunge.
So we're talking about personal moments, and when we were catching up earlier off camera, you said you were in New York on 9/11 and you were training with Merrill Lynch.
Merrill Lynch at that time.
And you saw the second tower go down.
Yes.
There are these moments in life where we always sort of we cannot forget. And there's always a takeaway that has sort of impacted the rest of our lives.
Absolutely.
You know, there's a pre 9/11 and there's a post 9/11, Vishal.
Yes.
How does that experience, how do you carry that experience in your life and also in your entrepreneurial journey?
Very good question. So just to rewind a little, exactly. So I went from India to study at London Business School to do my MBA, and that was my first job really. And those days, I'd borrowed money and gone and done my MBA, right? So here I am thinking I want to change the world. I actually saw the second plane go in, and then stood at a distance like most of people in New York to go down. Completely life changing, because you become thankful for things that you have. Stories that we think about, things that we're going to do in the next decade or decades, could have ended, and which unfortunately ended for a lot of people. You're just grateful. You're just grateful to be alive. You're grateful to do that. And I think it somehow gives you a purpose and a mission generically in life. How does that play out to my entrepreneur journey? Entrepreneur journey is not easy. We talk about entrepreneurs at the age of 25 and 30. And for me, being a banker for 20 years and taking this, it gives you a sense of a spirit. Ki kya ho jayega? What will happen? What worse can happen? I've been there. I've seen those experiences. I'm glad to be alive. So let me give it my best shot. Let me do it in the right way that I can. I think it's empowerment, because somehow creating the bond market is actually contributing to the economy in one side, because you're helping in capital creation. It's also helping individuals take better decisions and make more money and do better wealth creation. So they leave these impressions in your mind that what else can happen.
Is that why you were sort of able to start India Bonds at the height of the pandemic? And how has that unusual backdrop shaped your vision of India Bonds? Or has it at all?
So I won't take all the credit. As I said, my co-founder and me, both of us were stuck in this whole COVID when all of us were locked down, and hence began this inception. I would give it to that we all had lots more time, and also saying, we thought for years, both of us, that we would start retailization of bond market. And I think COVID again was that one moment, because if you remember, there was a phase where you didn't know if you'll be alive tomorrow or not. And we're like, kar lete hai, it's been time, let's do that. And that helped shaping up to say, if I don't do now and something really disastrous happens in COVID, then I would have not done this.
It's
right?
interesting you say that, because see, for most of us who had a lot of time during the COVID, or had more time than usual during the pandemic, locked in our houses, people took yoga classes. You went and started a business.
I did get on my fitness journey then also, but yeah, I did this as well.
You've spoken about a bond in every hand. What does that slogan truly mean for you? Is it about access? Is it about trust? Or is it about transformation of an investor's mindset?
I think it's about financialization of the economy. I really believe that fixed income and bonds are a must for everybody who thinks of financial well-being. Now, in 2021, we're barely a $1 trillion economy. We are a $4 trillion economy, right? So when the wealth creation happens, individuals should have an opportunity and access to invest in this. So I would rank that, first. Obviously, rung very well a bond in every hand, which is trust marker, really. So I really think retailization and the trust, and it shares a vision, right? So anybody who's financially aware, we talk about 100 million, unique financial users only in the country, that they should have a bond in their portfolio. And that number is as low as 2 or 3% only right now.
What parallels do you see between an evolved global financial market and India's evolving retail investor base? Because you're saying that basically you're developing the retail investor base to say that, hey, you can have a bond in your portfolio.
Absolutely.
Right?
Absolutely.
So what are the parallels that you see now that we're a substantially larger economy from when you started?
So a couple of things. One thing is that I always say everyone is a bond investor. Even you are a bond investor. And you would ask how. everyone in this country has a pension after a certain age. Everyone in this country has an insurance. All those big insurance and pension funds and the banks to deposit, go and buy bonds with it. So you are actually, you, me, everyone is invested already.
Anybody who has life insurance is invested in
Bonds. Yeah, because how else will they assure you a certain return? Because
Correct.
fixed income, the regularity, the assurity, most of it is what makes them invest in fixed income, right? Second aspect is that our countries is in some aspects far more developed than the Western markets. So getting into some not too much of technical, but the regulatory environment of a bond market is far developed in some other countries. We have electronic bidding platform which is transparent. We have a good data system, a good information that's happening out there, which actually tells me that there is a propensity. Now, what we lacked is financial infrastructure. What we lacked in the last 3 years is education and an awareness that, hey, now you can click and buy this. See, today you don't have to tell India what to do in an app. Everybody has 10, 15 apps, whether it is fast e-commerce, whether it's playing around equity, FNOs, SIP, mutual fund. All we had to do is saying, hey, you can do this too. So you did not have to teach digitization. You had to, now the mission is to educate, and sessions like this, I'm very grateful you've called me here, to tell people that if you were to invest in fixed income, rather than fixed deposits, you can make more money and have better choice.
Coming back to you, it must have been a big sort of mindset change you had to make from moving from being a banker to a founder. But what was the single biggest mind shift change do you think that is required to move from a career that's 2 decades into something you've built a stage for yourself, and then to sort of drop that and move into entrepreneurship? What's the single biggest mind change?
Madness? I've heard so many times, are you crazy? I think, sometimes the ideology or the romance of it exists, that saying, hey, I can go and do something, I can go and disrupt something. I think you need amazing amount of tenacity and resilience to actually walk the path. So apart from some bit of madness, some bit of, we can call it vision, passion, but to sustain that path, I was an absolute shock when I landed full time. It was like the classic, what do you know? You don't know how things work here. And I hate that statement even in my company, that this is the way it has always been done. This is the way it's done here. You don't know. And I love that challenge. And, I needed a lot of resilience in grinding to get people to understand it's not easy. Believe me, it's not easy. So anybody walking that path, you need a sheer amount of dedication. Because, I could be in a cushy corporate lifestyle for another 10 years and not done this. But I just believe in this story. I generally believe what helps us is, between the two co-founders, we have 40, 50 years experience in fixed income. So I do see a lot of technology companies or fintechs, which are very smart tech oriented, which relies a lot on mass communication and marketing. But I do feel that the domain expertise becomes very important when you do financial services. And I thought I had it. So I could try and solve for problems which people actually have investing in bonds rather than, just talking to millions of people.
My research told me that India has about 200 lakh crore parked in FDs. Why do you think Indians trust FDs more than debt securities?
It's wisdom. हमारे दादाजी ने, our parents told, बेटा पैसा हो बैंक में डाल दो, right? So I actually wrote a very interesting article on where the fixed deposits business came from. So the modern banking sector is a 100-year-old history, right? The Fed, the Bundes Bank, the
Reserve Bank,
yeah.
everything.
Before 100 years, people had money and they would keep it under the ground, under the mattress, तिजोरी में बंद करके पैसा रखा हुआ है. People said these banking institutions are great. For safety, people started putting money there. And the bank's job is to take your deposit and lend it to another corporate. Actually, it's a mediator who's doing your job, and now today you can buy corporate bonds. So that just became a habit around security, safety. You started getting a bit of return. And that habit is not changed or is changing quite rapidly. Now, thanks to technology, people have options and choice. Having fixed income is about having choice. Everybody knows ki kuch paisa, some money I have to keep safely on the side, 10%, 20% of your wealth or liquidity. They thought FD was the only way to do that. There were some long programs like postal savings and things. which have the problem that they're locked in for 5, 7, or 10 years. They're not transferable, so you can't exit them. And bonds follow, give you the perfect solution not to keep your money stuck. And this, so I think it's transition time. Things go through changes in India anyway. As I said, there are only about 100 million people out of 1.4 who are still financially aware, and hence I think everyone working in fintech, we see a tremendous opportunity in the next 5 to 7 years. If we go to a $7 to $8 trillion economy, and capital preservation will always play a very big role, because when you create wealth, you have to make sure, how do I save it, right? So fixed deposits is, if you want to be like your grandfather, go ahead and do that. But bonds are the new thing.
Bonds are Gen Z and fixed deposits are grandfather.
Our biggest clients are actually people who are much older,
People who are much
older,
older.
the wealth, who appreciate the stability.
Who want to preserve the capital.
Yeah, because once you've made it, when you're at 40 or 50, you kind of made your capital. And you'll be surprised to know that, the so-called the HNI segment, or the high net worth and people who have money, actually mostly invest in bonds. Because if you have 100 rupees, you will say, okay, I want equity, I want a big return, I want to double my money tomorrow, theoretically speaking. That 100 rupees becomes 10,000 rupees. And you're like, oh, wait, hang on a second. I'll still put 200 in equity.
But I'm good with 10% return.
Yeah, but I'm very good with 10% return on my remaining. And, that'll pay my bills, it'll send my kids to education. I can live a comfortable.
You were giving me a very interesting example of how, if you invested in Nifty headline, we would have gotten to, in 4 years, about 43, 44%, and bonds, at a 10% bond, I would have gotten to 46. You want to walk us through that one?
Yeah, absolutely. It's simple maths, so it's not complicated. And when I go to these forums, people say, I don't do bonds because equity gives me better returns. So if you take Nifty exactly 30th September 2021 to Nifty in 25, it would have given you, on a headline basis, a 42 to 43% return. Headline number to headline number. 4 years ago, if you invested in a corporate bond at 10%, and bond maths works that your interest, you reinvest at the same rate.
Correct.
So if you had bought a 10% bond, it would have given you 46% in 4 years' time. Almost absolutely close to headline. Now, unless you're a star stock picker, or you're amongst the 9% of the population in this country who make money in F&O, because 91% do not, as per SEBI. Unless you're that, please give me your number. I'll call you. I'll invest with you. But for the general mass, I think fixed income gives you similar returns to a headline equity returns. The exception lies last year. Take last year. Last 12 months, Nifty is minus 2%. If you still had that 10% bond, it would have still given you 10%.
Correct.
So it's not either or. It's like in your portfolio, 20 to 25% should be in fixed income.
How does India bonds sort of fit into this? How do you exactly simplify bond buying for a first-time investor?
Very good question. I think we've really debated it to a large extent. And we, in the initial days, and we still try to solve for it, there are two main hurdles that existed. The first one being education and awareness. People do not know what a bond is. And again, for this audience, for your large audience, a bond is nothing, is a loan to a company or a government. Loans have existed for thousands of years. That is exactly what a bond is. So we've actually tried to solve the education and awareness program or the problem first. Now, how do we do that? We have something called a bond university. India Bonds has Bond Uni, which has all the basics, fundamentals, a lot of podcasts, a lot of original content that we've written so people can read and study about it. We've done over 50 webinars in the last 4 years, and I do encourage my other colleagues in the industry to follow that suit. We've done educational webinars. We've done webinars with CEOs and CFOs. So if a company were to issue bonds, we've got the CXO and the CFO, and sometimes we did municipal bonds, and the mayor of these cities have come onto our platform. I said, you got to talk to the masses, explain your company, and explain your story. Other things that we do, again, on education is, for example, with NISM, which is a SEBI initiative, I go and teach about 1,000 to 2,000 students online a month with the professors there and talk about fixed income. Sessions like this, thanks to you, it helps us. We've partnered and actually worked a lot with financial media, journalism, digital, trying to explain and done the hard work of education awareness. I genuinely believe in creating a large-scale pie. I do not believe in selling just bonds because, it's not, for me, it's not technology that today I put a table on a website and I sell more tables. I do find that sometimes people are just selling triple B or very high yielding bonds.
High yielding bonds with high risk.
Yeah, but India bonds, we offer the entire fixed income spectrum. We offer government securities if you want it. Treasury bills, we offer triple A rated bonds at 6-7%. Highest safety, we go to 8, 9, 10. Let people decide. As a policy, we don't even offer triple B minus. It's the riskiest category in corporate bonds. We do not even offer it. We said at some point we just cut off the riskiness. So education and awareness is something which we really pride, and we've invested a lot of time, a lot of energy, a lot of tapes and hours doing that. The second thing is about access. Now, as you were talking, 3-4 years ago, it would take 48 hours. Thanks to technology, a KYC on our platform in India Bonds takes 3 minutes.
Same as any equity trading platform.
Now, but it did not exist before, right? Now, the problem with fixed income was that there was no financial infrastructure around payments. So what we did and used technology is for 3 or 4 main things, right? One was information dissemination. People didn't know. If I tell you, hey, go and buy a bond, you said, where do I start?
Where do I start?
Now, if you go to India Bonds platform, we have 100 bonds on offer.
I mean, typically somebody who had access to a broker would call their broker and say, I have to buy a bond.
And the broker said,
why do you want
this equity will give you double the money?
Correct.
Do you want to buy? They would not even ask you that you want to buy for 2 year, 3 year. On our platform now we have 100 bonds to choose from. We've categorized it: high yield, state guaranteed bonds, public sector bonds, government bonds, monthly income bonds, 10,000 rupee denomination bonds. So we help the investor make a choice. It's about actually having a very wide variety of the entire fixed income, which is not generally the practice in our industry. So we've kind of differentiated around that using technology. The second aspect of using technology, or what India Bonds does different, is we worked on the solution. So we actually have a lot of analysis tools for an investor to make a decision. What do I mean by that? 4 years ago, we sat saying, how will a guy buy a bond if he cannot even see where the bond is? So we made a bond directory which lists all the bonds in the country. Then we made a mathematical tool called a bond calculator saying, how will a common man calculate his returns if he doesn't have the tools to do that?
Okay.
So we made a bond calculator. Then we said, okay, now if I have few bonds, how do I look at it? So we made a portfolio dashboard. On a portfolio dashboard, if you have 5 bonds, you can see on a risk basis that how much is AAA, AA, single A. You can see cash flow basis. Our system sends you reminders that your money is coming in. So we actually solve for the problem very, very differently. And I don't think a lot of platforms still have adapted to that tools or analysis to doing that. So I think we've taken a different approach in solving the problem. Payments has been one of the big transformation change on all bond platforms, something which we started in 22. When you actually click and buy a bond, your money goes straight to the National Clearing Exchange. It does not touch the platform. It does not touch any stockbroker, and they credit the securities to you.
So how does your revenue model work without brokerage then?
We're not here for charity, for sure. It's a commercial venture. I think it's built in the cost from the sellers. Seller pays us a platform fees incentive to be able to sell this stuff.
But the buyer is actually not paying you anything. It's going straight.
The buyer pays what buyer gets. See, so it's technically, and see, we are regulated by SEBI, so we are not saying this just offhand. It's zero brokerage.
Zero.
Is if you say I'm putting 100 rupees to work, it is 100 rupees.
So all the 100, my 100 rupees will go to work.
Yes, we'll go to work at 100. There's no account opening charges. There's nothing. We have an open architecture. You don't even have to open a demat account with us. You can use any existing demat account. Yes. I think to enable the population to do this, there has to be some push factor, right? So which is like, hey, it's free. Try, come, let's do it.
Something like SEBI's online bond platform provider framework change the landscape or help you? How does that sort of tie into this whole space? Because there was a lot of information about the online bond platform provider.
So that is the change that I spoke about in November 22, which changed the inflection point. Was the SEBI's online bond platform regulation which came in. They created a complete new category. It has been very good for the industry because it streamlined information dissemination. Said, if you are an online bond platform, you have to show all this data to your investor, which includes credit rating reports, information memorandum, and things like that. That kind of information was not available earlier. Secondly, it prohibited all online platforms to sell any unlisted bonds.
Does that sort of prohibit you from selling anything that is rated as very risky? No.
And
you have a cutoff.
Technically, listed bonds are, which means much more disclosure. If a company lists its bond on the exchange, It has to report financials, etc. Unlisted bonds, you don't have to do anything.
Correct.
It's like a private agreement. So SEBI said, okay, to be safety of the investor protection, let's only do
Listed bonds.
listed bonds. Now, listed bonds have to be rated. So anyway, you know the rating category, how risky or not it is. So as long as it's listed, yes, we can show on our platform. So the online bond platform regulation actually has energized this retailization and democratization. And then so much so, last year we formed an online bond platform association, which again, my co-founder is the chair for. So, we're really helping as an industry together to, have the right guardrails, the right practices and uniformity of code and practice across.
How much of a role do you think, because you were talking about education and creating
Yes.
in this whole category in sort of building investor confidence, how much of a role do you think that partnerships with SEBI or partnerships with exchanges like the BSE or NSE help in this sort of creating awareness or educating people?
No, we could not do without them, right? So the entire financial infrastructure regulation is with SEBI. The exchanges, BSE and NSE, the NSDL and CDSL, the clearing houses, they've all played a very significant role because let's say to streamline payments and settlements, you had to work with APIs with the exchange and clearing houses. So they've played a very, very big role in creating that infrastructure. I think education awareness is an ongoing journey. And every platform, I mean, we do a lot. We hold that central and key to how we function. But getting more people, getting more partnerships definitely helps. The more people write about it, because India is a very large country. No, you be on shoulders of any one player or regulator or exchange to educate the masses. So I'm very happy that the whole ecosystem is building. We've partnered with people to do the same.
What are the things that you're building? See, two quick questions, which is, again, this is let me confess, this is for me also new territory. This is in the last 1 week or 5-6 days of research is what we've gotten to, right?
Yes.
What would you suggest, or what are you building? SIP style investing, I saw that there was an option. There are ladder portfolios for sure. Or are you also working on AI based advisories? Is that feasible? Do you have advisors where we can interact with a human advisor who's working? So how does this work?
I think I'm very excited about the future. The whole the biggest excitement factor for me is the potential for growth, right? As I said, only barely 2 to 3% financially aware investors in the country actually have fixed income. There are options because people will come up with some cool, things. And I'm not even sure if SIP in bonds can be done. I think there's some availability, but it's not a great framework. The reason you cannot do SIP in bonds is because bonds have a finite supply. A bond issue could be 500 crores. And if that disappears, what are you going to create, right? So you might put another bond or something, another bond. So I'll leave it to that. We've all actually already enabled AI in our workflows. So the first usage of AI we did is in all our marketing comms and marketing AI and videos and things like that. We just launched last week. The important thing, what AI does, that information cannot be guarded anymore. Information cannot be housed only by a certain amount of people. We've enabled AI in our bond details. So what does it mean? An information memorandum, like whenever there's an issue, there's a 100-page document. Now, our customers can query that document and ask questions saying, what is the covenant of this bond? What is the credit rating history of this issuer? So we've enabled AI to make information simpler. That's the first point we've already adapted. The road to AI that we have is what you're talking about, advisory. It's around robo-advisory. So you use AI, you understand people's behavior, portfolios, and then you would kind of guide them on choices. It's not pure advisory. So I think AI has a tremendous scope in deep diving and making information and access very easy and telling people, depending on the behavior of the input they give about themselves. People can say, hey, I have a 10 lakh portfolio. I'm 9 lakh in this. Can you analyze and tell me how it should be in fixed income? So we're working on those models right now with all due disclaimers that the ultimate, selection is from the investor, but making it a little easier for them.
Making choices a little easier.
Basically choice and, break away from the jargon. Any industry has a lot of jargon, and unless we explain it, people find it difficult.
What's the average investor profile that you have on your platform today?
So we have different kinds of profiles. So the amazing thing that happened with bonds that the minimum denomination moved down to 10,000 rupees. It used to be 10 lakhs 2 years ago, 3 years ago. So we have either people who are investing 10,000 to 1 lakh, we have a large mass of that. The typical behavior of that is that they like a higher yield return because if you have a smaller amount to invest. But I actually, again, uniquely, our platform offers HNIs, HUFs, and even small treasuries ease of execution. So we could trade from a 10,000 rupees to a 5 to 10 crore ticket. And 5 crore is retail size in bond market. We can trade on our platform, which is pretty unique. I don't think many platforms offer that because we really think fixed income solutions should not only be for the masses, but for all kinds. So we have all kinds of people on our platform. A typical profile is 30 plus. It's not become a big fad with Gen Z yet. We're seeing a huge change though, because portfolio construction or portfolio optimization is everyone's need. Even if you are 22, 25 years old, we're starting to see, salaried people, tech people actually putting 10,000 rupees a month into a bond. So you're seeing that change right now.
What would you do to manage investor psychology when there is volatility, or how would you manage this during outlooks when they're changing, when interest rate cycles are changing rapidly? What would you do? What's your take on it?
I think the way to build investor trust is over a period of time is transparency. I know I'll go back to the education awareness. If your investor, if your client customer sees you doing that over a period of time, disclosing risks at all point of time. So for example, on our platform on India Bonds, if you're buying a A minus, which is the riskiest side, it'll show you that, hey, this is risky. Are you sure you want to do this? Okay. So building that trust, and nothing is 100% guaranteed, but trying to communicate that we've built technology for analysis, explanation, transparency, webinars, highlighting risk. Yesterday, I did a little podcast. It was only about risks, 20 minutes. I said, forget about talking about bonds. Let me just talk about what are the risks investing in bonds. So I think if, nothing remains constant and all markets have to go through volatile periods or periods of uncertainty, we would just say that, hey, we are there. We're telling you it's happening or it's going to happen. We're not going to hide and run. Given the 20 years experience we've had, I've dealt with these credit cycles, right? So especially in 1819 in India, when we had a massive credit cycle or credit crisis, you had to just handle. People just want information. People want to make sure you're there to hold the hand, to express empathy, that you're with them. I think mistakes in finance are made when people in troubled times just run away or don't pick up their phone calls. So I have a dedicated, a bond manager. I call them bond managers who actually handhold, because there's nothing pure DIY in technology in fintech. You need to speak to a human being once in a while. And they're all trained. We don't let them talk to clients till they're trained on fixed income for 2 to 3 months in house. We do complete training. It's not that we hire someone that go and talk to the client.
What are the policy reforms that you think could accelerate retail participation in fixed income? I mean, we've come a long way.
Yeah.
But what kind of reforms would you like to see?
I think there are broad 3 items that I want to talk about, which is very nuanced to the fixed income market. Unlike equity, which you can click and sell, selling a bond in fixed income is tedious and somehow a little bit of paperwork is involved. So sometimes it could take you 2 to 5 days to execute a sell order. If we are so advanced in technology and we are actually working with infrastructure people to develop a solution whereby you should be able to click and sell a bond. So only if you do that, then the market really becomes liquid. So I think, that infra reform is required. Secondly is about distribution. India is a very large country. You need distributors, you need market intermediaries, financial advisors, wealth guys who are actually explaining to the masses about the fixed income product. In equities, that is regulated as per APs. Equities you cannot buy. You either buy from an equity broker or you buy from an authorized person, right? So you can't call me and say, Vishal, I want to buy equity. I have no idea how to execute that. So there's a framework called APs. For mutual funds, we all know there's a framework called ARNs. Fixed income, there is no distribution, regulation, or code. Anyone can become a fixed income and a bond distributor. We have written a lot of white papers. There's a lot of good work happening. But I think if that were to come, the fit and proper, the person is educated, trained, I think it'll be really, really good to disseminate information on fixed income.
So while I was researching this, I read somewhere that India's bond market is described as being where equities were 10 years ago.
That's right.
What will fast forward that decade?
It will not take 10 years to get there, is for sure. I think thanks to technology and financial infrastructure. I think that'll fast forward because I'm a big believer in the economic growth story of India. I'm a big believer that we would hit that $7 to $8 trillion economy. Just mathematics, growing at 7% compounded for 5 years automatically gets you 65% growth, combined growth in 5 years' time. So I think people will have that need, and financial technology and accelerated information is going to get us there.
On this, my sort of last query on this one is, do you see opportunities, and especially by using technology,
Yes.
in bringing Bharat, which is typically tier 2, tier 3, India, into the bond market? Because they are now, I mean, even equities are going after them.
Yes.
That's where equities see the growth.
Yes.
How do you think they'll respond to the bond market?
There's a very interesting study, a survey by SEBI. It's an annual survey. It says 80% of Indian households are risk averse, do not want to take risk. Obviously, what gets the news is the whole equity F&O and the whole trading aspect. And this 80% resides in the tier 2, tier 3 cities, right? So they can relate to being, conservative about fixed income. They're not necessarily the big equity players, right? So technology is going to, disseminate information, and it cannot be done alone by technology. That's why we need the army of advisors, distributors, the so-called the entire financial infrastructure to work in. But as we say, India's growth is now coming in tier 2, tier 3, and this will be a very well-suited product. They understand loan. Now you're giving the loan to a company.
Bit ago, I heard you talk about how you train your in-house people for 2-3 months before you actually let them talk to a consumer.
Yes.
Get back to that kind of a culture. How do you nurture curiosity and learning in such a niche product domain like fixed income?
So, I get surprised when I interview people and people who've been in financial services. Now, they could be in equity broking houses. They could be working in banks. These people, bond managers, who I call them. Being aware, they know that this fixed income, I call fixed income being the last bastion to be taken on by technology. They're pretty aware that this thing is going to become big. I want to be part of a big story. And people who are financially aware, who are bond managers, they kind of come in with that. Thankfully, I used to wear suits to banks for 20 years. I obviously wear trainers. So the culture is very open. I am learning, actually. What I realize is that I learned over the last 3 years. So even if my designer, my marketing team, my bond manager, whoever wants to, they'll just come and say, hey, Vishal, what do you think of this idea? So we've tried to create a culture where ideas are very, very welcome. Maybe 2 or 3 of 10 will get implemented, but no one is shy of talking. And the comfortable communication that we've built within the system helps us to keep a good pulse of a consumer and client as well. Because if there's a client problem, that's paramount. What is the client experience? What did he say? What is the feedback? We have a customer care, a section also talking to clients. So I get very energized. The average age of a company is 30, 31. Very young people. I learn a lot from them. And they want to do things. And that's what we try.
So what are the kind of professionals that thrive at India Bonds?
So we
You
have,
don't say all kinds.
no, we have specializations, but people who have ideas and are happy to present, like, let's get done, just come up with creative ideas. And I try and say, you're entrepreneurs, right? So I can't articulate, but we all, we have an ESOP policy. I'm very, as founders, we've carved out a large amount. We make sure that, I think 80% of our population already has ESOPs, and it does not matter what role they are doing. So, we build that ownership along the entire company. So people who survive, who have ideas, and great.
See, one thing I find interesting about fintech as a whole space is that you have a lot of regulatory compliances.
Yes.
How do you balance that regulatory compliance with the agility that is required in a startup?
Very good question. And, that's where accidents happen, right? I think the good thing is between the two of us co-founders, we are both ex-bankers or current banker, and we've come in a regulatory regimen for 20 years each, right? So for us, it comes very naturally. We would not do things necessarily and risk the business or risk the industry. And we found our ways to be, agile in that, because what we realized that even the last 2-3 years in our industry, people who said, SEBI said, do not do unlisted. Some platforms continued till they got notices that you got a short business. I cannot afford and should not, because regulation exists for investor protection. You can innovate around that. We have a very good free dialogue with the regulators explaining things. The way they work is they always put an opinion paper out. let public comment into that. So that practice is very exciting. And, we usually write a lot of white papers talking about that. So I do not find regulation inhibiting at all. Well practiced, and just make sure that, we chug ahead within the framework.
One advice you'd get to young professionals and entrepreneurs entering into fintech, two different sets of advice perhaps, but
Yes. Young professionals entering fintech, make sure you believe in the founding team. Coming into a fintech, think yourself as a VC investor. Are they funded well? Are the founders good? And what is the culture, right? So, and fintech I think we're only 10-15% of the way there where we're going to be in 10 to 15 years. So if you really want to build a career, please join. Absolutely. For founders, they don't need me to tell them. I mean, it's amazing.
bit of crazy.
You have to be crazy. Don't be a crazy like me at a late stage. Start early. But finance, makes the world go round, right? You can have solutions. Obviously, we have this fast e-commerce fad in the country, but everything in the world moves around money, whether it's payments, insurance, investments. So if you attach yourself to that, and how underpenetrated in the country it is, we've seen stories of underdeveloped markets becoming developed markets. The whole Viksit Bharat of 2047 is that we'll be a developed economy. A developed economy will be a multi-trillion-dollar economy. I think we're just starting. So in 10 years, will be amazing. The growth which we will all see, I think it's going to be quite phenomenal.
The next set of questions is ubiquitously called the rapid fire round, but it need not be very rapid. But just quick, crisp, instinctively, whatever comes to your mind. Bonds or equities?
Bonds.
AI in investing, hype or a game changer?
Game changer.
One book that has shaped your financial thinking?
Too big to fail.
One book that has shaped your life philosophy?
Dare to Dream. It was, I think, by the Oberoi sign. I read it in the early 90s. It really changed my mind.
One piece of advice that you'd want to give to your 25-year-old self?
It's going to be all right. Do not worry.
And you said everything moves around money. Future of money in one word?
Well, I'm not a fan, but I am a mild believer in digital and in crypto and the sense of that. And who knows, the future of money could lie there.
So those are fairly crisp answers.
Yes.
Just to wrap this up, how big do you think India's retail bond market could become in the next 5 years?
So I see a natural progression. So bond market from $2.8 trillion in 5 years, I would think will go to $5 to $6 trillion. The corporate bond market from 630 billion will probably, in my opinion, double or treble in 5 years. So the size, we're talking about $1.5 to $2 trillion corporate bond market. And I think retail participation, which is scratching the surface of 1 to 2%, could become 15, high teens. That really moves the needle. That's huge amounts of money that we're talking about.
So when you imagine India bonds in 2030, what does success look like? Scale, innovation, or investor trust?
I think scale, because the whole vision about a bond in every hand talks about a scale. I do hope that we have investor trust. Innovation would get us there, but scale is for me. Absolutely.
So on that note, Vishal, this has been very instructive for me. It's been very incisive for me.
When are you starting investing in bonds?
I'd have to think on that, but I wish you the very well as you continue this sort of journey of democratizing this for Indians and for sort of unpacking corporate bans as a category for us. So thank you so much for doing that, and I wish you all the well.
Thanks a lot, and thanks for having me over. I really appreciate that.